What's up guys, it's Morgan. Today I'm going to be talking about two stocks going into earnings that really intrigued me as far as a play, and I'm going to break down specifically what I'm looking for with each of those stocks. Before I do so, I do want to mention I've had a lot of requests for stock scanner videos. I'm going to be doing a series of those that will cover everything from penny stocks, momentum stocks, dividend stocks. So if you have any interest in that, please feel free to subscribe and turn on your notification bell so that when I release those, you can check those out and come back and see them. Anyways, let's get into the video and break down these stocks. So the first company that I'm breaking down is Zoom, okay? Zoom was part of this lockdown trade basically, and it's performed really well in the past. Now keep in mind this year it's down about 50% or so from its 52-week high, which is not insignificant. That's huge. But hear me out on this. Chegg, which is a comparable stock that's in the remote learning, got hammered on their earnings. I think this shows a trend that as things reopen, and especially where most people I know use Zoom as a free tool, not the paid version. Also, while I don't necessarily trust articles all that much, there has been some negative press towards Zoom. So I do feel like there is going to be a tension and more of a tendency to go to the downside. For me, this is a short-term trade. I think long-term management has a good beat on things, but I think short-term the markets will probably push this one down if I were to guess. Therefore, I would be playing puts. Now, Zoom reports Monday. On Tuesday is going to be Best Buy. Now, with Best Buy, it's kind of in a unique space of retail, if you ask me, because it does compete with Walmart and Target, but not on everything. So one of the things that I want to mention here is Walmart and Target's earnings. Both Walmart and Target actually had pretty decent earnings. Despite the supply chain shocks, they've actually done really well. However, markets were not kind to them. That's why in this trade, I would also lean to the downside. On top of the fact, on a technical basis, Best Buy is pretty overbought at this point. And these options are a little more affordable. So depending on the size of your account, these might be a bit more manageable if you feel that this is a similar play. Now, does this mean I dislike Best Buy? No, long term, I actually love Best Buy. However, just looking at the short-term situation, I think this is good for an options scalp trade, and they report in the morning. So it's one of those things where I may consider entering into my options contracts on Monday afternoon just before close. Keep in mind, if you're not aware, options contracts do not trade pre-market or after hours, so you want to keep that in mind depending on what position you take. You could also wait to see what earnings looks like before getting in, but keep in mind there's a lot of volatility and those options premiums can get pricey. So what are your thoughts? Do you think either of these is going to have a massive beat of some kind or gap up after earnings? Or do you think that the markets are tending to still push things down even if they've had solid earnings? Let me know down in the comments. Thanks for stopping by and hope to see you again real soon. Bye.